Investment refers to the allocation of funds, typically money, time, or resources, into assets or ventures with the expectation of generating income, profit, or future value. It involves the commitment of resources in the present with the hope of the achieving a favorable financial outcome in the future. We selected two companies for our investment process. The first company is Brown's Investment Company and the second one is Indian Oil Corporation or IOC. The Browns Investment Company is engaging with the financial industry and the Indian Oil Corporation is engaging with the petroleum industry. These two companies are one of the largest companies in Sri Lanka, and these two industries were more effective for our investment process. This slide shows Porter's five forces analysis. When we are talking about Porter's five forces analysis, the company can determine areas of opportunities and threats within their industry. It can help to develop their competitiveness and profitability. This term focuses on five areas. The first one is the threat of the new entrants. It identifies how easy or difficult it is for competitors to join the the market. Brown's company has several new entrants and there are limited new entrants in IOC. The next one is the bargaining power of suppliers. It analyzes how strong business suppliers has and how much control. Low power of suppliers in Browns and high power of suppliers in IOC. Third one is the bargaining power of buyers. It identifies with how strong a business's customers have and how much control. There is a high power of buyers in Browns and high power of buyers in IOC. Fourth one is the threat of substitute products. For substitute products, it focuses on the number of competitors, their prices, and qualities of the products and services. High threat of substitutes in Browns, and there is no substitute products in the petroleum industry. Competitive rivalry focuses on the several existing customers and what each can do in the marketplace. High competitors in Brown's company and low competitors in IOC. This focuses on the justification of the Brown's investment and IOC. It divided into three components. First one is government rules and regulation. Government regulation refers to the laws, standards, and directives enacted by government authorities to guide and control various aspects of society, the economy, public safety, and environment. Second one is foreign demand and restriction. Foreign demand refers to the want, need, and purchasing interest of individuals, businesses, or government in the countries for goods, services, or aspects produced in their other countries. Last one is average growth rate. The average growth rate is frequently used to assess and compare the growth rates of investment, economic indicators, and populations in a variety of sectors, including finance, economic, business, and statistics. Pramudi will continue. Next slide.
When we discuss the Brown investments PLC's pestle analysis, under political factor, the operations are influenced by governmental stability, taxation, and industry regulations. Economically, Sri Lanka's economic health and exchange rate fluctuations directly affect their performance. Socially, they are aligning with our society's culture norms and adjusted demographic changes like age, income, and urbanization trends. Under technology, they are adapting to technological trends and enhancing the digital footprint that important for competitiveness. Legally, they are dedicated to adhering to laws by ensuring intellectual properties are safeguarded. Under environmental, they prioritize sustainability and respect environmental standards. LIOC is also operating in a dynamic landscape. So politically, they are stated by government policies and international relations. Economically, fluctuations in oil prices, growth rates, and exchange rates shape their strategies. Socially, by recognizing social shifts, they are boosting environmental awareness. Technologically, they are embracing renewable energy innovations. Legally, laws and agreements guide their collaborations. Finally, under environment, they are reducing emission and increasing renewable energy. In essence, adaptability and commitment to the external factors have driven their success. So let's see this SWOT analysis. You can continue, Tarka.
Thank you, Pramodi. Today I am excited to present to you two companies that operate in vastly different industries but share a common goal to navigate the challenges and seize the opportunities in their respective markets. Let's dive into brief short analysis of Brown's Investment PLC and Lanka Indian Oil Corporation. Brown's Investment PLC, trading as BILN, is a financial excellence company with a consistent revenue growth and profit margins. Their diversified portfolio mitigate market risk and their experienced management team capitalizes on investment opportunities. Brown's Investment PLC faces challenges like market dependency and geographic diversification, but has opportunities to expand into emerging markets, embrace ESG investments, and utilize fintech advancement of operational efficiency. Now let's turn our attention to Lanka Indian Oil Corporation, a dominant player in Sri Lankan oil market. LIOC's affiliation with Indian Oil Corporation gives it access to vast resources and expertise, strengthening in the position. Their diverse product portfolio and well-established distribution network across Sri Lanka provide a competitive advantage. However, they face important dependence, exposing them to geopolitical risk and oil price fluctuations. Regulatory changes and environmental concerns also pose challenges. Nevertheless, LIOC can explore opportunities by diversifying into cleaner, renewable energy solutions, expanding their infrastructure to meet growing fuel demand, and actively participating in renewable energy projects. In both cases, competition and technological disruptions loom as threats. The investment sector and oil industry are highly competitive, and rapid technological advancements can alter the landscape. To thrive in these dynamic environments, these companies must stay nimble, adapt to change, and stay ahead of industry trends. Over to you, Dilma.
Thank you. Profitability ratios are financial metric used to evaluate a company's ability to generate profits relative to its revenue, asset, equity, or other relevant financial measures. These statistics show how efficiently and effectively a business generates profit from its activities. There are two types of profitability ratios. One is margin ratio. Margin ratio is profit margin that are used to measure a company's profitability. Gross profit margin, operating margin, and net profit margin are some of the common margin ratios. Second one is return ratio. Return ratio provides information that can be used to evaluate how well a company generates return and creates wealth for its shareholders. These profitability ratios compare investment in asset or equity to net income and indicate a company's capability to manage this investment. If we look at the profitability ratios of Brown Investment PLC, we'll have a higher gross profit ratio in 2022, which is 23%. The higher gross profit ratio indicates that the company is operating effectively. Looking at the EBITI ratio in 2021, it shows the minus 5% lower margin, but unfortunately, it increased in 2022. It is a positive sign for the company. Also, the return on equity ratio in 2021 shows minus 5%, less than increases to 70% in 2022. Therefore, we choose Brown Investment PLC to invest our money first. Secondly, we choose Lanka IOC because the gross profit ratio increased gradually 19% in 2023, and the previous year it was 10%. The EBITI ratio increased by 6% in 2023. So these ratios indicate that the company was financially healthy to invest in. Kavindi?
Thank you, Dilma. Next one is gearing ratios. The gearing ratio is a financial metric used to measure a company's capital structure. It shows the proportion of a company's capital through debt compared to equity. From gearing ratios, we can identify the level of financial leverage or risk in a company's capital structure. There are three types of gearing ratios: ratio and debt ratio. Generally, a lower gearing ratio signifies less financial risk. Therefore, lower percentage of gearing ratios are preferable and indicates lower levels of debt and lower financial risk. Next one is investor ratios. Investor ratios are the ratios which investors evaluate the ability of the company to maintain profitability and continue generating positive returns against their investment. There are two main types of investor ratios: earnings per share ratio and price to earnings ratio. In earnings per share ratio, generally, the higher ratio is better. In price to earnings ratio, the lower ratio is better. Next one is liquidity ratios. Liquidity ratios are financial metrics that measure a company's ability to meet its short-term financial obligations by assessing its ability to convert assets into cash. The main type of liquidity ratio is current ratio. This table shows the values of ratios in Browns Investment PLC and Lanka IOC PLC. Let's analyze these ratios. If we look at Browns PLC, the equity ratio and debt ratio of Browns PLC are comparatively low in 2022 and 2021. Generally, lower gearing ratios means less financial risk. The price to earnings ratio of Brown's company in last 2 years is also very low. The low price to earnings ratio is also considered good. Therefore, we decided to invest in Brown's Investment PLC. Next, if we look at Lanka IOC PLC, in 2023 and in 2022, debt to equity ratio and debt ratio of Lanka IOC are very low. A low debt to equity ratio and low debt ratio signifies less financial risk. In last 2 years, the current ratio of Lanka IOC is 3.56. The current ratio of around 1.5 to 3 is also considered good. And the price to earnings ratio is low in Lanka IOC last 2 years. The low price to earnings ratio is considered better. Therefore, we decided to invest in Lanka IOC PLC. Over to you, Devunaka.
As the summary of trading activities, after computing all the documentations of starting a CDS account at Asa Securities, we agreed to collect 20,000 rupees as our initial investment. So that means 2,000 from each member. Then after doing some analysis, on 18th of July, we agreed to buy 2,950 shares from Brown's Investment PLC at the share price of 6.7 rupees. And from that day onwards, we continued to analyze price fluctuations for an increase of the share in order to get a capital gain by selling those shares. But unfortunately, there was a downward trend. So after discussion with group members, we agreed to sell all the shares at a share price of 6.3 rupees on 14th of August. Almost after 3 weeks from the initial investment, the loss was 1,108 rupees. Thereafter, we were agreed to buy 150 shares from Lanka IOC at a share price of 120.5 rupees, and we were able to hold that share for only 4 days until the deadline of our site. And in that time, Lanka IOC share price also reduced, and it was a loss of 450 rupees for us. And when we move to the weekly calculations of investment returns, at the first week, the holding period return was minus 2.99% with a loss of 309 rupees. In the second week, the holding period return was 4.37 with a profit of 546 rupees because at that time, the share price was increased from 6.4 rupees to 6.68 rupees. And in third week, the holding period return was minus 2.84% with a loss of 359 rupees. In the fourth week, we held the Browns investment stocks only from 11th August to 14th August. So holding period return was minus 2.93% with a loss of 370 rupees. After selling the Browns investment shares, we bought and held Lanka IOC shares from 14th to 18th August. So for that, the holding period return was minus 2.49% with a loss of 450 rupees. As the total return from the Bounce investment from 18th of July to 14th of August, the total capital gain was minus 5.97% with a total loss of 1,108 rupees. So the total profit or loss from the investment for the month from 18th July to 18th August is minus 1,630 rupees. In terms of risk calculation for the investment of Brown's Investment PLC, associate total risk was 4.2%. Let me show the graphical representations of weekly returns. As you can clearly see, we only had a positive return for the second week from the Brown's Investment PLC. For further explanations, now you can continue. No.
Yes, Devanath. So in the penultimate segment of this presentation, we have the graphical representations of the stock price of both the companies of Brown's Investments PLC and also the Lanka Indian Oil Corporations. First and foremost, we have the graphical representation of the stock price performance of the Brown's Investment PLC. As you all can see, we purchased shares from Brown's Investments at the price of 6.7 LKR. As the days went on, it moved down, and as you can see, to a 6.6 and 6.5, and also to a lowest value of 6.4 LKR by the end of first week of 26 July. And then it moved up the ladder to a recorded highest value of 6.8 LKR, and then it again went down, and by the end of our investment period at Brown's Investments, on 14th of August, it was at a recorded lowest value of 6.3 LKR. Moving on to the next slide, we have the graphical representation of the stock price performance of the Lanka IOC PLC. So as you can see, we could only invest and hold those shares for about 4 days in LIOC. By the time of we purchased the shares, it was about 120.5 LKR worth a share, and then it went down, and also it came to the same exact value of 120.5 on 17th August, but by the last day we sold the shares, it was at a lowest value of 117.5 LKR. So calling it a day on my part, now I would like to invite Aloka to conclude the presentation.
Thank you, Dylan. Moving on to the final segment of this presentation, that question itself lays the before approach to conclude this presentation. What have we learned through a real investment process? Well, we are delivering this presentation with the intention of stressing out the outcome that we have obtained through investing in Brown's Investment PLC and Lanka Indian Oil Corporation. After thoroughly analyzing the two relative industries, we have established on few conclusions. As in the petroleum industry, is essential for the day-to-day existence of the world economy. While the petroleum resources, which oversees the country's petroleum sector, contributes to the country's economy and its energy production. It also faces challenges in competition between the existing players. If we divert our forces toward the Brown's Investment PLC, it can be seen that the Brown's Group excels in a variety of industries, as in agriculture, automotive, heavy machinery, and investment, etc. In terms of financial performance, diversification, and management skills, Brown Group is successful but also struggle with market condition and regulatory constraint. Despite the issues of important dependence and environmental problems, LIOC benefit from its market control and distribution network. Having said that, when we look at our trading journey from 18th July to 18th August 2023, it includes purchasing 2,950 shares from Brown's PLC, which led to a loss courtesy of market developments. A further loss resulted from our transaction of purchasing 1,630 LKR. Throughout this presentation, our intention was to showcase the importance of considering market conditions, risk exposure, and income level when choosing an investment strategy. Finally, I would like to thank you both our module lecturer, Ms. Daupati Gamage and Ms. Ritmani Pereira, for your feedback.